Hello and welcome to the Enterprising Investor podcast of the CFA Institute. I'm your host, Lotta Moberg, and you usually find me as the host of the Financial Thought Exchange podcast of the CFA Institute Research Foundation. But today, my guest is Anna Martirosyan. She is a strategy and transaction manager at EY Parthenon, where she leads M&A and financial due diligence projects with a focus on banking and capital markets. Anna also teaches finance and economics courses and conducts research on ethical AI and quantitative methods in finance. And she's here today as the author of part of a monograph that we recently published on AI in finance. You find that in the Research Foundation library. So first, thank you so much for your great contribution there, Anna, and welcome.
Thank you, and thanks for having me.
So we'll talk about AI, ethics in AI today. And I'm thinking maybe we should start by delineating when people think about ethics in AI, there are kind of two ways of thinking about it. And you covered both aspects in your chapter here of the book, which is, are you using AI for unethical purposes would be one, right? Or will the AI, and the other perspective is, will the AI do something unethical, not necessarily with my consent or intention? Which aspect do you think is most important for practitioners to focus on here?
Actually, what I think that these are two complementary ways of looking at AI ethics, and that there is no one aspect without the other. So if I elaborate from my end, the first, as you mentioned, is like more of a system-centric approach where we are considering if the model's behaving ethically. In finance, for example, this means fairness, avoiding systematic bias against certain groups, ensuring transparency, robustness, alignment with the regulatory expectations and governance. So it mostly looks at the model's outputs and considers if those are responsible. From the other perspective, we are looking at the human-centric aspects of the AI ethics, where we need to question, both as developers and as managers, if the systems that we are using are behaving ethically, and if we are designing them and deploying the systems in a way that they would be operating in an ethical manner. So a model can only be as ethical as the choices behind it. So how we collect data, which features we engineer, they all make up the storyline, which then is put into practice. And only this way we can set incentives for our own teams and taking into account how also seriously we take the documentation and monitoring of the AI practices.
And is there a way to make sure an AI, assuming you're not trying to be unethical yourself, right? But in the end, the AI is this probability machine, right? We can do our best to describe what our goals are, but the AI will never really have a goal in itself, right? So is there a way to in any way assure that the AI will not do what we would consider unethical things?
Actually, from our daily interaction with the AI, I'm sure most of the practitioners are encountering this on a daily basis. So basically, how AI works, as you have clearly mentioned, it always works based on the commands that we are giving it to the AI platforms. So as long as we're clearly defining our objectives, it will adopt itself to the objectives that we are setting out for it to operate. So that is why it is very important to have clear objectives set out and communicate this to our AI systems. So when we talk about setting ethical practices, we're talking about embedding responsibility into every stage of the AI lifecycle as much as possible. So first one being the clear objectives themselves. So what is the model intended to do? And most importantly, what it is not allowed to do is the cornerstones of the governance structure that needs to be in place for operating, for using AI on a daily basis. For example, if we look at the credit scoring, is our goal purely predictive accuracy that we want to predict properly when setting out the automated loan approvals for the customers who come to the bank and apply for the loans? Or do we also require explainability and fairness objectives? So, as long as you make sure that these are properly communicated to the platforms, you have the set out governance structures in place that you can assess against, then you can be sure that at least to a degree you have protected yourself and you can assess against this fairness objectives.
So is the key here basically not allowing the AI to be creative and hence not therefore in any way be able to hallucinate beyond a specific metric? So this would be a very confined example, right? Let's say I have a Z-score and here are the metrics that you can use to assess whether somebody's creditworthy.
Exactly, exactly. And from my own experience, because you've mentioned like I have been involved in a number of M&A deals. So when you do a review of the company's performance, and for example, currently we know that every other company, if not all of them, are trying to use AI and integrate AI into their operations. And if you, as an external auditor or like as a reviewer, you are going to assess some aspects of the company's operations and you know that they're using AI, how else would you evaluate their performance if there is not a set out governance structure in place? Because as you mentioned, AI can go creative, take information from a lot of sources, and you need to have a guidance against which you need to evaluate. So basically, it needs to operate based on the structure and not be creative, unless it's like some form of a creative work that you are doing. But for the financial related, for the financial sector, I'd say there is not much of a place of being creative because it's a very high risk and sector, and we need to consider all the risks and transparency and fairness, and there is not much of a place for the critical thinking to allow AI to behave as it wishes.
Hmm. Yeah, I'm surprised to say that because I bet a lot of practitioners are looking to apply AI is going to utilize exactly that creative aspect. That is, find me an algorithm to beat the market over the course of a specific timeline or figure out way in which others have not already figured out in what way these companies are, say, credit worthy so that we can make better bets than the other guy on bonds, right? Because if it's just an algorithm that is, again, let's take I really like taking the straw man of like the Z-score that everybody knows. We learned it in our financial, like in our CFA textbook. Most likely will not make money out of that, right? Because that's something that people are already applying. So is that something that is a guideline that should be out there, not to use the creative aspects of AI? Because I would be surprised if we don't see practitioners applying it exactly in that way.
I understand your point, what you're saying, but I was presenting it more from the perspective of how AI generated codes need to be working, like in the system. But of course, if you are looking for a specific algorithm trading equation that you'd like to be more creative, as you said, to find the most creative ways of, for example, of finding a way of doing things that hasn't been done before, though again, it will be based on the number of based practices that are out there that it can stem from. But then, after you have generated the response, the creative response that you evaluate and you find it useful for your aspect of work where you need to apply it, you need to put it down. So, because like every time it can go and generate a more creative response, and you might get sidetracked from what your actual goal and purpose is. So basically, in my viewpoint, unless you are looking at a single line of a code for the entire operational system, it needs to be systematic. And of course, there needs to be a governance in place. And that's where the EU and the US regulations come into play, because unless it is stipulated in some place and there is a governance in place, you cannot track what AI is able to do, and it can go out of it would turn into a black box, which would be very hard to track and to assess against. So it might prove useful for a very short period of time, but you need to internalize that into your operational system and governance. This is how I see it.
You mentioned the regulations. People might have heard that there are regulations coming out about AI. If you're based in the United States, mostly that's state regulation, right? Perhaps you can give an overview. You mentioned in your piece the EU, OECD, and then the US, mostly on the state level, right? As sources of regulation. What is happening in that world?
Yes. So exactly. In terms of regulation, EU is the most advanced within the AI Act. It uses a risk-based framework and many tools in many AI tools in finance, as previously mentioned, they fall into the high-risk category. That means requirements about the transparency, robustness testing, human oversight, documentation, post deployment, everything. For practitioners, this is very similar to the model governance, with the exception that in this case, there are stricter and more explicit obligations for the practitioners. The OECD provides principles, fairness, accountability, transparency, that many countries, including EU and US jurisdictions, they can draw from these policies. But it is not binding, but still it shapes policy. So this is a useful use cases that can be referred against. And the US has, as you mentioned, it's more on a state level, so it's more fragmented. It's mostly market oriented. So instead of a single law, we see federal guidance and state level privacy regulations. The US approach is mostly market driven in the sense that large firms increasingly adopt EU level standards because they are more stringent. And for the companies that are operating cross borders, they rather adapt to the stricter regulations to avoid any potential conflicts in the future. And this would ensure more consistent governance across region as long as they are adopting not to their own but to the stricter jurisdictions. And for the practitioners, the takeaway would be to build governance frameworks that can survive scrutiny in the strictest jurisdictions they plan to operate in. And this would reduce the compliance burden and increase trust both with the clients and regulators, as well as all the other partners that they would be working with.
Do you know anything about specifically for finance that is relevant for the people in our field? There's coming out regulations around AI.
I feel like this AI field, because it's evolving on a daily basis, there are a number of regulations that are being developed on a daily basis. Especially, they are looking, from what I see, they are more looking into the synchronization between the jurisdictions. So there is the one size fits all approach, adaptability as much as possible. Because if we're looking at the stricter jurisdictions prevailing in the market, and this is what is becoming a preferred end goal for the companies that are operating cross border, this would be, again, the EU would be the most advanced AI act that is being continuously worked on and developed. So it's not that on a stone, it is being continuously improved and adopted to our market needs.
And the OECD, it's a kind of an organization of rich governments that covers the US and most of the European countries too. Do they overlap quite a lot, their guidelines versus the regulations coming from the other countries? Or are there like a contradiction between them or anything like that?
I don't think there would be major contradictions between the jurisdictions, but given this is more of like a legal aspects of the papers, it would not be really my place to comment on this. But yeah, of course, there would be at a higher level. The end goal is again about the responsible AI practices globally. So basically, one can touch upon certain aspects in more detail, whereas the others would be more on a high level basis, giving more place for the organizations to choose, like what is the limits for their operations. But as an overall perspective, it should be more or less the same, concentrating on the fairness, accountability, and transparency. And from my research perspective, this is what I came across to. So basically, they are standardized to a degree and are trying to adapt to the market needs.
Yeah, that makes sense. So, what are you seeing out there in terms of practitioners using this specifically? You mentioned, which makes sense, using it to using AI to detect fraud and bad behavior, like internally in their internal operations. Makes sense when you read about it. Do you know if that's something that more companies are adopting, like the larger companies or anything like that?
Yeah, for sure. Banks, for example, for ages, they have been assessing the AML practices, anti-money laundering practices, and that this is a very important aspect. And it can be AI can be very useful in this area in terms of the operational automation. And companies today use AI for everything from predictive analytics to operational automation, of course, depending on the size of the company and how much it can internalize the AI aspects and how much resources it has to automate number of its processes. But from what we see also from the market, the more companies dedicate the resources to automation, the more they are saving on the lines of the more effective operations of customer service, risk modeling, compliance monitoring, even in terms of the forecasting. So as much as they can eliminate the side tracks, they would internalize the AIs into their operations. And in finance, AI is already widely used in credit scoring, fraud detection, and algorithmic trading.
Right, just see.
But of course, with this, it gives rise to new vulnerabilities. So, if previously we had other short bags when this was not automated, with the automation, we come across new vulnerabilities. One of which would become the automation bias, because human tends to trust model outputs more because they say that there is no human judgment involved, right? It would make them more ethical choice. This has been a debatable area. For example, even in the cases of the self-driving cars, when they are faced with a decision to hit the bus or, for example, to hit like something else, but sacrificing the lives of the people inside, just based on the calculations that, for example, in the bus, there were many people who were, for example, if they were kids or they were retired people. So this is like a debatable area, which would be the more ethical choice. But there have been claims that the AI would make the most ethical choice considering certain aspects about these people's background, their biography, how much they could contribute to the environment if they survived, and etc. So this would be like more of the, yeah, on the automation bias. It's a bit scary to think about it in this way, but of course, yeah, this is what we're facing nowadays. And another vulnerability that I would mention is the model drift, where practitioners have been using certain set of data when training the data set, but after a while the market condition changes and predictions changes, markets or customers behavior shifts. So automation can also create single points of failure, a process that once had multiple human checkpoints may now depend entirely on an opaque model. And that's why, coming back to my initial point, it is very important to have a certain set out guidelines, so not to run into these opaque models and black boxes.
You mentioned also fraud and cyber attacks becoming more common with more automated systems. I want to ask you about that. Like, is that because when you have an automated system, somehow it's more vulnerable, people can manipulate it more easily?
That would depends also on the cybersecurity protection that the companies have in place. But of course, yeah, with automation, because as fluent we become with the AI systems, the opposite, right? The people who are trying to do fraudulent transactions, they're also using AIs. And so you can use AI not only for the good purposes, but also the opposite. And this is what we're facing. So as long as you need to make sure that the proper cybersecurity protections are in place, not to run into these fraudulent aspects, and to gain as much as possible the positive sides of the AI and not be vulnerable and not be constrained by its drawbacks.
Right. So this is it's nothing new that you have to think about cybersecurity, right? Companies have been vulnerable for a long time, but now it's just that their foe is faster and smarter in a way when they're using AI for these nefarious reasons. Right?
Exactly, yeah.
So I wonder also one thing that you cover in your piece, which is very interesting, and of course I recommend everybody to read it, is about how you can gain transparency. So if I think about an AI, right, I think about it as a little bit of principal component kind of exercise that I'm doing. Something gets spot out and I won't know what parameters you were using to get there because I know there's so many millions of them. But you mentioned about how there are techniques to fix it, to actually understand or the reasoning or the decision making of the AI. Maybe you can talk a little bit about that. It's kind of fascinating.
Yeah, I feel like this is about the building the inclusive AI ecosystems, and for me, inclusion has two dimensions. One of them being the societal inclusion. So making sure AI systems do not systematically disadvantage certain groups. This means using representative data, testing for bias, making sure models work fairly across all the demographic segments. In finance, this is essential for maintaining trust and avoiding discriminatory outcomes in lending or in other aspects of finance. The second dimension that I like to mention is the organizational inclusion, ensuring that AI is not something that only engineers understand. So, business leaders, product managers, risk teams, they must be able to interpret model outputs and ask critical questions. For example, in my industry work and in my teaching, I see that empowering non technical professionals to understand AI is one of the best tools for building responsible systems. An inclusive AI ecosystem and is where diverse voices from data scientists to domain experts to end users shape the design and oversight of the technology. So this way, if you build this interlinked AI ecosystem where everyone feels involved and you use the broad sets of data not to discriminate against any groups, disregarding any cultural specifics that might come into play, you would make sure that the results would be unbiased, they would not be discriminatory. And at the end of the day, it is very important also for the practitioners because not all of us are data engineers, but it is as much important for us to understand how the model operates in order to gain the all the lessons and the applicable solutions that AI generates for us. So unless you are able to explain what the results are, and it would be closely tied how the models operate. So they're like chicken and the egg story. So whichever comes first. So they're interlinked at a certain point.
Yeah, I thought there was like a technical tool out there that you mentioned in terms of like that you can apply to somehow creates a more, I don't know, transparent results from the AI itself. Of course, we want the governance around that to be tight and you know perfect as well.
Yes.
So, is there anything that we got to wrap up? But I want to make sure that for the people who are going to read your piece, what are you hoping people take away? Where's the big takeaway that you hope your readers leave with?
I think that the real opportunity is to move behind the idea that AI ethics is a constraint. Ethical AI is about building systems that are reliable, explainable, trustworthy enough to be used in high stakes decisions. In finance and other industries, this is not just socially responsible, it's good risk management and good business. The more intentional we are in designing AI, the more value we unlock. And ethical AI, I would just like for the readers to come to same conclusion with me, that the ethical AI is more than a regulatory checkbox. It is the cornerstone of sustainable innovation in asset management, equipping finance professionals to unlock AI's full potential while upholding trust, transparency, accountability, and fairness.
Thank you. Thank you so much, Anna, for coming on.
Thank you for having me.
And thank you everyone for tuning in to the Enterprise Investor Podcast. If you like these kind of conversations, make sure to check out also the Financial Thought Exchange podcast from the CFA Institute Research Foundation. Today, I have been your host. My name is Lotta Moberg, and our guest today was Anna Martirosyan. Thank you.